afternoon. I hope you all had great lunch and some coffee. Super excited to be here, especially with Rob. I've gotten a chance to know him a little bit better over the last hour. Amazing journey from what you've had in your career, running large corp, incubating what's now a multi-billion-dollar company. So let's get started. I think what bolttech has achieved is remarkable growth, especially given the current environment. Earlier this year, you raised a $147 million Series C round, one of the biggest in the Insurtech industry. From your vantage point, what's that secret ingredient? And how do you continue to identify gaps, pursue these opportunities, and convince your investors to go after them?
Okay, very first, I want to say thank you very much for having me. Nice to get a chance to get some time with you. For those of you who don't know bolttech, I just wanted to say a couple of words. We are the world's most internationally scaled Insurtech focused on distribution. Today we operate in North America, Europe, Asia, and Africa across 39 markets. And we operate with about 250 different insurance carriers, connecting those insurance carriers to end distribution partners who want to sell insurance. We are a B2B2C business model, so we don't go directly to the consumer. We work through other businesses and help them go to the consumer. And we focus mostly on embedded insurance. Insurance that is the offering that's made at the exact point where a customer wants to buy and needs to buy that protection. So that's who we are. Quick kind of reaction to the question that you asked. I had the great pleasure of coming out to found bolttech in 2018. I moved to Singapore from, as you can tell from this accent, not born here in Asia. I was born in the United States. And I moved to Singapore in 2018, and ultimately we founded bolttech in 2020. So it's pretty interesting, a story of resilience, because it's a company that was actually born during the pandemic. And so it was actually 5.5 years ago that this organization was built. And so you have to know resilience to actually be born during the pandemic and have success. The thing that has really been the recipe for success for bolttech is that we have a great mission and we have a very clear North Star about how we're going after that mission. And the way I would say that is, in the world today, there is what we refer to as a multi-trillion-dollar protection gap. And that protection gap would mean, for example, that any of you in today's audience who need some form of protection, maybe it's automobile insurance, maybe it's cyber protection, maybe it's personal accident protection, maybe it's travel insurance, whatever it is, you need some form of protection, but that protection need is not being met. And whenever it's not being met, that gap is a problem because people have a need and that need is not being met. The size of the prize in this space, it's huge. It's a multi-trillion-dollar protection gap. And so I love to begin by thinking that we are on a mission to help to address this protection gap. And what's great about it is we have a great social purpose. We are here to try to help others to get protection that they otherwise can't get. And so I think it begins with, are you really trying to achieve something that has a good purpose? That's number one. The second thing is we have a North Star that has really been sort of the guiding light to how we will help to address this protection gap. And our North Star is that we want to connect people with more ways to protect the things that they value to help to close that protection gap. And so to me, what hasn't changed is we've never changed the North Star. We understand what we're trying to do. We understand why we're trying to do it. And if you really believe in these things, then the ability to go out and do it every day, regardless of the conditions, whether you're in a pandemic or whether it's a horrible conditions for raising capital, it can still be really motivating for you to get up every day and go out and help to try to solve this problem.
I mean, I love the fact that you've reiterated and mentioned the word North Star maybe 10 times, right? I mean, how that is key to what you're trying to do. Of course, is very, your mission-led. I can sense it from your tone. I mean, how passionate you are about serving the underserved in general, right? I think you started off in Asia, which is a big underserved market, and then the leap jump to Africa and building in a whole different part of the world. The regulations are different. The demographic is different. Of course, it's also the commonalities, the underserved. But how did you approach that in the sense, I will go to another market and then go do the same thing all over again, which is finding a big gap and addressing it? And were there any particular commonalities you brought and challenges you faced?
Yeah. So we were born in Asia. So we are a Singapore headquartered Southeast Asian business. We have a very nice team here in Indonesia, led by our Indonesian general manager, Andrew Kahns, here in the first row. And so it's a wonderful pleasure for me to be able to call Southeast Asia our home base. But this closing of a protection gap that I described, it's not a Southeast Asian only protection gap. It's not a Singapore protection gap. It's not even just an Indonesian protection gap. It's a global protection gap. And so our vision for all of this has always been to be the world's leader when it comes to the space. So we think big. And when we grew, we went from Southeast Asia to Europe, and then down to Africa. What that tells you is that the solution that we're focused on isn't only isolated to emerging markets. It's actually a solution, and it's a problem, a global problem, that is faced in the well-established, more mature markets, as well as in the emerging markets. Let me give you an example. We think that there are 4 major drivers of this protection gap. The 4 major drivers are people are getting older. So 100 years ago, the average age on the planet Earth was in the 40s. The average age that you would live to was in the 40s. Today, the average age that you would live to is in the 70s. So you can see that people are getting older. But that getting older creates lots of new problems. Lots of new protection problems, because people have this gap between how long will I live, but how long is this body designed to hold me up for, to have a good quality of life, right? So that's an example of understanding one driver of the protection gap. Another driver of the protection gap is just that the world population is getting so darn big. 100 years ago, there were 2 billion people on this planet, and today there are 8 billion people on the planet. In 100 years, the world's population has grown 400%. So understanding these problems has brought us from Southeast Asia to Europe to Africa, recognizing that this problem, aging, is more of a problem, for example, in Europe than it might be in Africa. But climate might be more of an issue in Africa than it could be in some other geographies. And so if you understand the drivers of this root cause issue, which is the protection gap, and we believe it's the aging population, the growing population, we believe that it is the increasing temperature of the planet Earth, as well as the pace of growth of pace of change in technology. But these things help us to understand the problem. The more that you understand the problem, the more that you understand that the solution for the problem isn't needed in one geography, it's needed everywhere. And as you said, the path to solving this problem isn't really the same in every one of the geographies. It's not by chance that you have an American from Philadelphia, Pennsylvania, living in Singapore. But I live in Singapore because I can't solve Southeast Asia's challenges from the comfort of my home in Bucks County, Pennsylvania. It will not happen. Instead, you must come out and you have to have a local solution to a macro problem. So we understand the macro problems, we understand the source of the problem, and then what we try to do is bring a localized solution. The challenges that we face are huge. One of the challenges is that the regulations are so different between Asia. Think about it. Here in Indonesia, the regulations of the OJK are different than the regulations of the MAS in Singapore. They're different than the HKIA in Hong Kong. They're all different, country by country, and we have to be an expert in those rules so that we can follow the rules and behave the way that the country wants us to behave, while trying to do a great social purpose, something that is good for the marketplace. And so that is a big challenge. And also it's very big challenge because the buying habits of the consumers are very different in Europe than they are in Africa, than they are in North America, than they are in Asia. And so you have to understand the cultural differences, the buying differences, the interests of each of these parties, as well as the regulations of each of these parties. But the thing that keeps us going all the time is that we're here for a very important purpose. We can do good for the world by helping to close this protection gap, and that's what gets us up out of bed and keeps us wanting to conquer every obstacle that gets put in our place, time after time after time, day after day after day. So these, it's very mission driven, as you can see. The challenges and the opportunities are huge. Moving into Africa, as you mentioned, when we move into Africa, the most recent country that we've launched in is Kenya. Trust me, there is a protection gap in Kenya. There is a protection gap in many parts of Africa. And we can't solve that unless we are there. And so that's sort of what has driven us, because we recognize that we need to help be a part of the solution, but you can't be a solution unless you're there.
That's super insightful. And I think in general, Insurtech is perceived as slow-moving, not innovative, not high technology. And the things you mentioned, right? Getting past regulatory hurdles is always difficult, and there's only so much tech can solve. But then as you expand the resilience, the mindset, keeping your North Star, defining the right challenge, and then tackling it with a solution that's proven maybe in another market, I think those are critical. And I see that in a lot of the investors resonate with that as they continue to back your expansion story, right? I think switching to a topic that's common these days, which is funding, right? I mean, it's difficult. It's harder to convince growth versus profitability, where's the right balance. And I think what we discussed earlier, your journey of incubating bolttech is very unique. It was part of a large company. It was an idea that you were extremely passionate about, and you went after it, and you got that company to back you. But despite of that, your fundraising has been fairly standalone. You've done it without the support of the large corporate behind you, right? With the current markets, and maybe you had a bit of a safety net or not, would love to get your views on that, right? You decided to double down without the backing of mothership, quote unquote, found new investors, built their conviction on growth. So how hard was it for you to bring these new incoming investors and their perspective on seeing you as an incubated company of a large insurance company and still being okay with it? I think those are very fascinating facts that would love to understand from your vantage point, right?
So there's a lot in that, but I think many of you who are in the audience understand that it's very hard to raise capital. It's been very hard to raise capital for years. This is not new. We refer to this as the funding desert. We're out there looking for our new source of nutrition, and it's really hard to find. For those of you who don't know much about us, we raised the largest Series A in the history of the planet Earth for an Insurtech. It was $247 million back in 2021. We followed that up with the largest Series B for an Insurtech of $246 million in 2023. And then you heard about our successful Series C. What has really given investors the confidence to put capital behind us is the fact that we've continued to make really good progress. You have to have demonstrated progress, but demonstrated progress not simply in the context of growth, but demonstrated progress in the context of understanding that in the end, overall financial discipline is going to be super powerful and resonate really well with these investors. And so we are a company that 5.5 years into our existence has achieved profitability. So we never grew just with a mission toward growth at any cost, but it's a mission of grow. And when you grow, don't forget the end goal, which is you've got to grow and create value for your investors. For any of you who enjoy Formula One race driving, or at least watching Formula One, I describe being a founder of a business as being a race car driver in a Formula One track. On the straightaways, you better go fast, and you better pass the competition, go faster than the competition, grow. And that's how we think about the straightaways. But if the only thing you're good at is putting your pedal down to the metal and going really fast, at the first turn, do you know what's going to happen? It will be very unfortunate, because at the first turn, you're going to go straight into the wall. You can't do that. You must show that you have the ability to go fast, but that you have the ability to make the turns to EBITDA profitability. Maybe the next turn might be to cash flow profitability, or to net profit after income tax profitability. If you're only good at the turns, but you stink at the straightaways, you will lose this game. If you're only good at the straightaways, but you don't remember that you have to make the turns, you're going to lose at the game. And so an investor has to see that you recognize the balance between the two. And so for us, we've been on a very clear mission with very clear discipline around how it is that we were going to achieve these objectives. And when you can show the investors that you're making really good progress, that they can see your growth has been what you promised them it would be, that they can see that you're making progress towards your profitability goals, you give them the confidence to display the confidence in you. If you can't give them the confidence, we would have just had a Series A, and that would have been it. But with our Series A funds, we did what we said we were going to do, and new investors gave us the additional capital to have Series B and so on. And so to me, I think these are really important lessons. They're not super complicated. You all broadly understand that you have to have balance and you have to think about profitability. It's just that many, many, many companies fail to actually execute upon it in the first place. So to me, I would say that that's been a super key. The other thing is that this is something that you don't just go out to raise capital when you're in a fundraising round. We are always in conversations with investors, always. And you can't, it's a little bit like trying to borrow money at the time that you need to borrow money. That is the worst time to try to borrow money. You want to secure a debt facility when you don't need to borrow money, not when you do, because no one wants to lend it to you when you're desperate for that borrowing. And so this is an ongoing process. You have to think a turn or two ahead, and you have to think about this with a real series of balanced kind of moves in your mindset. And that's what I think is the key, and that's what's been the key for us.
I think that's super valuable. I mean, staying in constant touch with both your current potential and maybe investors. I think that's where even a lot of early stage founders are not very good at. There's one thing I advise. We invest in largely early stage companies, pre-seed to Series A. And one thing I advise them on is, even if someone is maybe your potential lead investor 2 years from now, send them a quarterly update. What's going well? What's not going well? Are you changing something? So I find that super valuable. I think quick thoughts on that. Does it get easier from Series A to B to C, maybe D next year? I mean, does it get any easier ever? Or is it always, yes, you do all the things right, keep them appraised, but still when you're getting that one big check to lead? And any reflections on that?
It does not get easier. I don't want to scare any of you away. It doesn't get easier. So Series A was hard to find the lead. Series B was hard to find the lead. Series C was hard to find the lead. And by the way, you have to be prepared to hear the word no. So maybe we're that stubborn person who just doesn't take no for an answer as the final answer. I'll always take your no as a maybe. See you next time, right? And so we continue to keep this ongoing dialogue with investors. We don't go to them just when we're raising capital. We're engaging with them all the time, and engaging with some of them even when we know there's no chance in this round that they're going to invest, but you're planting the seeds for a long term and showing them that over a long horizon, you're able to make success. And I think you asked a question earlier that was sort of about the slow-moving nature of this industry. So we are in the Insurtech business. Insurance has been around for a long time. But this protection gap that I've described has gotten bigger, not gotten smaller. So if we do all the things that we've always been doing the same way that we've always been doing them, you're going to get the same result. You're going to get the same solutions, and you're going to get problems that get bigger and more complex, and you're going to get a bigger and bigger protection gap. So we view ourselves as a part of that solution. And when people say, gosh, it doesn't seem like it's moving very fast, the world's moving fast. And so therefore, underneath the surface, we're pedaling really fast to deliver solutions that stop it from getting further and further into the distance of this idea of closing the protection gap. If there was no Insurtech, if there were no insurance companies working super hard to close this protection gap, trust me, it would be much bigger. So we don't consider ourselves at all to be the competitor of any of you, to be the competitor of any insurance company. We're here to enable those players to get to their end result that they're trying to get to faster and better. And if we can do this as a partnership, as an ecosystem, and as friends, good. But if everyone's going to be your competitor, if everyone's going to be your enemy, it's going to be a really hard day every single day. And so we don't consider everyone to be our enemy. We don't consider everyone to be our competitor. Instead, we think of this concept of, can we create an ecosystem? Sometimes we'll even be in co-opetition. We'll cooperate and compete with you at the same time. It's okay. You have to change your mindset if this is going to work.
Great. I think talking about mindset, and in the last 30 minutes that we had a conversation, and if I may, I would like to switch to your personal journey, which I believe is really fascinating. And for those who don't know, so Rob used to head AIG. He was a CEO. But I also learned just a few minutes ago, he's an endurance athlete. So whatever you can think about, high rocks and marathons, and currently he's on one of the toughest challenges, in my opinion, which is 777, 7 marathons in 7 countries in 7 days, and he's training for that, which talks a lot about not just himself, but the company you've built with the mindset of resilience, endurance, being mission-led, et cetera, right? I think if you could share, overall, also what's public data is bolttech today is roughly priced at a couple of $2 billion, it raised over $740 million over the course of the company. You went from being that corporate CEO to founding bolttech, and now bringing it here, combined with your personal journey, what have been the toughest moments, either in your personal life or bolttech's journey, pivots that you had to plan for or didn't plan for, but had to take them anyway? And then also, I think lastly, how do you approach when you're either personal growth or company's growth? What are the 3 things any founder in the audience should keep in mind as they go on to their journey of building a large enterprise?
Wow. Let me maybe start with that last question of what are 3 things that I would tell any founder out there to do, and I'll tie it back to my overall observations. You said it. I'm an endurance athlete, so I seem to love pain. And so I would say to you, embrace the pain. Because no pain, no gain. You've heard that phrase. If you're going to win this game, if you're going to really be a participant in this marketplace, it's not just about the sprint and what can I do next month, next year. It's this. I've been at this. I've been living in Asia since 2018, very happily so. I love it here. This is my home. But I didn't come here for a sprint. I came here for a multi-year journey. And so I think I would tell anybody, you can't just think of this about, hey, I'm going to build a company and in a year or 2 or 3, I'm going to flip this company and get out. That's nonsense. You can do that if you like. But if you want to build something that's really substantial, you've got to be in it for the long haul. Just make up your mind that you're going to do it and turn off that switch that is the quit switch. When you're training to be an endurance athlete and you're on the treadmill and you've been running for 2 hours, you don't shut the treadmill off. If you need another hour of training, you keep going. And so the very first thing, embrace the grind and don't be afraid to stick with it. The second thing that I'd say to you is have thick skin. I have heard the word no many, many, many times. My board tells me no. No, you can't do that. I take no, you can't do that as maybe you can. You just have to spend a little bit more time to help them understand the vision. Or I've been told by potential investors, no. You asked earlier about this idea of raising capital. Does it get any easier? No. I should be honest. We've been very successful in raising capital, but don't confuse it. I've heard 100 no's. 100. Not 1 no, not 10 no's, not 20 no's, 100 no's. But I've heard some really good yeses, which is how we've raised the capital that we've raised. So you've got to have thick skin. And then the other thing that I would say to you is you have to have a passion for the thing that you're really here to do. If this is a part-time hobby and you don't believe in what you're out here trying to do, then good luck. Then you're just a mercenary who's out there trying to make a buck. I'm not out there trying to make a buck. I've actually never received $1 of cash in exchange for bolttech equity. This is my livelihood. I'm working to build something great. I'm not in a rush to get out. With that said, I do not want it to be the CEO for the rest of my life. I would love to find great talent, bring them into our organization, nurture them, give them space, and allow them to bring the great next version of great ideas, the next version of energy into the company. It's a little bit why there should be term limits to a president or to any leader. You can't lead forever with the same level of great ideas, innovation, great energy. You need to share that stage with others. I'm super proud. I've got a bunch of my colleagues here in the front couple of rows. I love having you guys as my colleagues, and I want you to have the space to run the company and do a great job. If you do that, it'll be better for me. It'll be better for our investors. It will be a better answer overall.
No, thanks. And I think, again, one example of your, what you said twice, I think, is resilience is a lot important than founders think about. Not quitting when it gets really, really tough, and then saying, okay, I got to train for this, both mentally, bring the people in my organization up to the same speed with me. Is it advisable to be then super transparent, to share that, look, times are tough, we all have to power this through, and then training them to be on the marathon with you?
Yeah. Some of my colleagues who were here, at least one of them, she might raise her hand, Kate, has actually done a marathon with me because I make my team actually run in some of these races because they should have the opportunity not just to participate in the corporate marathon, but in the real marathon too. And so I think that the more you can get people on board with you, the more that you feed off of their energy, and also the more that you teach them that this is what is to be expected. So, I would just say to you, any of you who have great ideas, I would say, just remember this. A great idea with horrible timing can fail. A bad idea with great timing can win. The best companies will be those who have a great idea and can last through good times or bad, and then you will win. And you've got to create that, but that's a mindset.
No, I think that's a key takeaway, especially on the topic of defy expectations. A great company, great team that can last through good and bad times. Ultimately, they come out as winners. And I think the expectation most founders have is like, let's catch the timing right. Let's encash it now. Let's monetize now. I think that's a very short-sighted objective. But if you're in the long haul and you survive through the ups and downs, I think that's then gives you the right to win. I know we're over time, but this was really insightful for me. And I think my expectations was I'm going to get a lot of fluffy answers, but I didn't. So thank you for being candid and being very honest. Thank you to Tech in Asia to bring you on to speak this session. I hope it was insightful for everyone here. Thanks a lot.
Thank you.